Okay, so today we're going to do something a little bit different. We're going to start a new series called Financial Report Review. And so I want to do more of these things in the future. Essentially, what it's going to look like is us going through 10Ks or 10Qs and kind of just understanding sort of the current financial positions of different companies that we're interested in. And today we're going to start with KULR Technologies. And so what I have is I have the 10Q opened up for KULR Technologies, and we're just going to scroll through and we're going to look at the balance sheet, look at the income statement, and just kind of together look at what their current financial position is. I know for KULR Technologies, the recent release was in the third quarter. So it was released, I think, September 30th, 2024. And so we're going to go through it here. Okay, so right here pulled up, we have the balance sheet. And so the balance sheet is kind of broken out with the assets, liabilities, and stockholders' equity. And then we have the income statement here below. We'll start by just kind of reviewing the balance sheet, going through kind of line by line. And if you have any questions about anything, I'm not an accountant, and this is also not financial advice in terms of investing in KULR Technologies or this or that. So I just want to put that out there. So again, I'm not an accountant. I'm just going through everything line by line, and correct me if I make any mistakes in the comments below. I love learning about this kind of stuff. So just looking at the assets, we have the current assets, which is broken up into cash, accounts receivable, we have inventory deposits, prepaid expenses, and then that's the total current assets. And then we have the total, the non-current assets are going to be below, and that the whole thing is going to be the total assets. So looks like they're sitting at about $912,000 in terms of the cash. Sometimes for larger companies, you can see that it's like in thousands, but in this case, it's just 912,000. And then you have accounts receivable. So the accounts receivable being sort of what is owed to KULR Technologies has not been paid, but since it's a total current assets, it's going to be likely paid in the next 12 months. And so to be considered a current asset, you would have to be paid in the next 12 months. The non-current assets, which are going to be listed below, are expected to be paid, but with like over 12 months, it won't be within 12 months. And so, okay, cash, a little bit on the lighter side for cash, 912,000. But then again, this is kind of before they got a lot of the bigger news and some of the contracts and stuff. And so this was a lot different picture from what it is today. But 912,000, accounts receivable, 2.68 million. And then if we compare this to the year prior, looks like their cash position is a little bit lower, but their accounts receivable is a lot higher, which is a good sign. Their inventory looks like it decreased by a little bit, 606 versus the 1.1. This could be a good thing. Maybe they're selling a lot faster. Um, and then you have the inventory deposits 12 or 20, and then prepaid expenses and other current expenses 603. That one looks like it's roughly the same from the previous year. And so the whole thing totaling up into about $4.8 million versus 3.9. So about $1 million more from the previous year, which is all good. I would say that that would be good. Um, and then looking at the non-current assets, which are below, we have accounts receivable non-current portion. Looks like about 300K versus the previous year, which is nothing. So that's expected to be paid, but maybe in a year or 2 years or something like that. So over 12 months. And then you have property and equipment. Looks like that decreased by a little bit, 3.5 million versus the 4.7. Maybe they sold off some of their property or equipment, or who knows. We have equipment deposits, like 1.3 million, about the same as the year prior. Security deposits, intangible assets. We have about 600K. Intangible assets being kind of like brand name and things that are not real. And then we have operating lease right of use asset, 1.3 versus the 129. And then a few other line items, everything totaling up the total assets being about 12.3 million versus about 10.8. So we're seeing almost $2 million more think it's closer to about 1.5 in assets, the total assets from the year prior to the current year. So that seems pretty good. We're seeing some growth here. We have liabilities and stockholders' equity. With stockholders' equity, essentially what it is it's all their assets, so everything you're seeing here above, and then minusing the liabilities, and then that equals the stockholders' equity. So it's kind of everything that's left after the liabilities minus the assets. So for current liabilities, we have the accounts payable, which is what KULR Technologies owes to, at this current time, to other suppliers and other companies. So it looks like we're seeing about 1.1 million versus 2.7. So I mean, in terms of how much they owe, they actually owe less versus the year prior. Could be a good thing, could be a bad thing. It could be a good thing because they owe less, they don't owe as much, but it could be a bad thing because maybe it's signaling that they're maybe they don't have as much demand, and that's for that reason they're not kind of ordering as much and that kind of thing. We have accrued expenses and current liabilities, 3.2 versus 3.4, so that's a little bit less. Accrued issuable equities, 505, that's a little bit more. Notes payable, 991 versus 0. So essentially the total, and then deferred revenue, from my understanding, is the revenue that they have received, but they haven't actually done the service and that kind of thing. So it looks like they're really taking a big step on that one. About 551,000 the year prior, and then 32,000 here. So it looks like they're delivering a lot of their promises and that kind of thing. And so the total current liabilities, we're seeing about almost 6 million this year, and then 6.7 or 6.9 million, excuse me, the year before. So we're seeing some progression here in terms of the liabilities, the current liabilities being down. And the current liabilities are expected to be collected or paid in the next 12 months. The non-current, kind of the same thing, over 12 months. And so now we're looking at the non-current. We have operating lease liabilities, non-current portion, 900, and then we have the finance lease liability, notes payable, non-current, and notes payable, 266 versus 250, so not that big of a difference. In total liabilities, we're seeing a really big step. It looks like the reason why we're seeing such a large step here, 7 million versus 13, is the prepaid advanced liability net of discount. So this could be accounts payable, and it looks like, I know what they've done is they've paid back a lot of their debt. And so this could be maybe like some sort of line of credit or some sort of debt, and it looks like they paid it off. I mean, 5.8 versus versus nothing, essentially 0. Liability net of discount. Yeah. Please correct me in the comments below on what this thing is. It looks like it's some sort of debt item. It's a liability. It may be a long-term item. It looks like maybe it was expected to be paid in the long term. It is a non-current liability, and so to me it would seem to be some sort of debt item. Looks like they paid it off if they did owe anything. So that is all good. We got 13 million to about 7 right now, and then we have the stockholders' equity, preferred stock and all their series uh, and that sort of thing. If we look at the total at the bottom, we have the total stockholders' equity, which is the 5 million versus the -2 that they had prior. And the -2, if we scroll up for the 2023 ending year in 2023, we have the 13 million here for the total liabilities, and then you would minus the 10.8 million for the total assets, and then you would get the -2. They're in a lot better of a position now. They have about 7 million in terms of liabilities and that 12 million in terms of assets. They're in a lot better position now, being around 5 million in terms of stockholders' equity. And then the total liabilities and stockholders' equity would be 12 million, and so that would be kind of the 7 million liabilities, and then the equity, stockholders' equity, 5. So that is good so far for balance sheet. It looks pretty good. I'm hoping this video doesn't end up being too long. I'm kind of aiming for somewhere around 10 minutes, 15 minutes, hopefully not super, super long. Um, And do let me know if I can cut out certain things or how I can streamline this. This is my first video in terms of KULR technologies, but I'm hoping to do other ones like maybe go into Tesla or go into Apple or go into Amazon or Google or a lot of the other ones, um, and just walk through them. Anything you have in the comments, any company that's publicly traded, we can kind of walk through their balance sheet and income statement or other financial statements, and we can just kind of have a better look and better understanding of the company. So now looking at the income statement, this is very simple, very easy to understand. We have the revenue, we have expenses, and then we have their net income kind of in the bottom. Okay, for revenue, it looks like we have the 3 months ended on the left, and we have the 9 months ended on the right. I'm gonna stick to the 9 months ended on the right. I think that one is more useful to me in this case. But we can look at the other one as well. Looks like we have about a little bit of a dip from 23 to 24. We got 7.4 roughly to about 7.5 roughly in 2023. So a little bit of a dip in terms of the revenue. The cost of revenue, however, went down, and so it looks like the gross profit is actually up for the 9 months ended September 30th. So that is good news. We have operating expenses, which is R&D, and then SG&A and that sort of thing. For R&D, it looks like for the 9 months ended, we are down a little bit. So maybe they did a lot of research in the prior years, and now they're kind of, using a lot of that research and creating more products and that sort of thing with the research they used in the past. We have SG&A, which is kind of like admin fees, selling, and that kind of thing, salaries, and all that. So about 14.5 million the prior year. It looks like it actually dipped to 11.5, which is good news. Lesser SG&A expenses, and then you have total operating expenses. Looks like we're almost $5 million down, which is amazing. And then now it looks like the loss from operations, we're at about 11 and a half, 11.69 versus the 17. And this number is the gross profits minus the total operating expenses. So it's still in the negative. However, it is definitely better from the year prior. There's so many good things this company is doing, so we're hoping to see better things in the future. So we got other expense income. We have interest expense, amortization, loss of debt, extinguishment, and then we have sort of the total other expenses, and then the net loss. So looking at the interest expense, we're lower, so that is a great thing. It looks like we don't owe as much, and so not as much interest is being accrued. Ooh, looks like I zoomed in a little bit. Um, Looking at the amortization of debt discount, looks like it's a little bit higher. We have the loss of debt extinguishment a little bit more. Okay, so now looking at the net loss, we're at about 12.9 versus 18.5, which is amazing. We're less of a net loss versus the year prior, which is great. So far, so good. We have the net loss per share, kind of them doing that math. And we're seeing it's a lesser loss, still a loss, but lesser loss. And then here's kind of the shares that are outstanding. It looks like 173 million versus the 150. I think there's more now. I know what they're with the purchasing of Bitcoin. I believe what they've done is they've diluted more shares and put more shares in the market and used that to purchase the Bitcoin. But looking at this, yeah, just from one year to the next, looks like we're about almost 60 million more shares. So that is going to be the income statement. Um, and there's a few other statements. I don't know if we'll do that in this video, but if you guys are interested in walking through any other statements, do let me know in the comments below, and I'll go through there and I read every single comment you guys post. Do be sure to subscribe as well. We're trying to grow this channel, gain subscribers. Be sure to like if you like this video, and I'm looking forward to doing more of these kind of videos in the future. And if you have another company that you want me to do a financial report review, I don't know if we're going to just say financial report review or if we're going to call it FRR. But regardless, if you have any other companies or recommendations, put it in the comments, and maybe in the next video, I'll shout you out for putting it in there, but also we can review that company. So I've enjoyed walking through everything. It's been Aladdin Invests, and I'll see you guys in the next video. Take care.